The required amount we had to deposit with the clearinghouse was so large that we had to take steps to limit buying in those volatile securities to ensure we could comfortably meet our requirements. Hi, welcome to the video, and today we're going to talk about what happened this week according to Robinhood. They posted this on January 29th regarding the GameStop AMC debacle where retail traders weren't allowed to buy any more shares. There's been a huge amount of justified uproar because on the surface it seems like the hedge funds were bailed out because they had a short position that was bleeding money as long as people continued to buy and push the stock up. Because trading was halted, there was a large dip in GameStop that allowed hedge funds to essentially get out of their positions for much cheaper and lose retail investors a lot of money. So it doesn't look good, but behind the scenes, it's actually a lot more complicated than that. In today's video, I want to go over the market mechanics that Robinhood says is the reason why what happened. We'll also go over some of the ways Robinhood makes money, mainly regarding how they get rebates from market makers, but also what people don't know is that they're actually their own clearinghouse. And this is a key part of the story. But before we dive into the technicalities of their explanation, which actually goes into a lot of detail, I want to give a high-level summary, which I think this Yahoo Finance article does a good job doing. So we'll start off going over some parts of this article and then go into Robinhood's response. Robinhood's CEO refutes GameStop hedge fund conspiracy theory and reveals what actually happened. When the exponential 500% run-up of GameStop stock this week reversed on Thursday to come crashing down after trading platforms like Robinhood blocked customers from buying shares, there was no shortage of outrage and theories as to what was behind the trading platform's decision. One theory in particular alleging the decision may have stemmed from outside pressure coming from hedge funds shorting GameStop stock quickly gained attention from a surprising group of people. Ted Cruz, Alexandria Ocasio-Cortez, Reddit, everybody seemed to band together. What this theory was alleging was that a hedge fund like Citadel, which is actually Robinhood's market maker, also had a short position in GameStop. So people think, because of this very suspicious conflict of interest, that they must have told Robinhood to block these trades so that Melvin Capital, which is staked by Citadel, could exit their position without losing too much money. The CEO of Robinhood, Vlad Tenev, though, pushes back, saying, quote, "On that conspiracy theory, I think I've over and over again said it's not true. Our decision to temporarily restrict customers from buying certain securities had nothing to do with a market maker or market participant or anything like that putting pressure on us or asking us to do that. It was entirely about market dynamics and clearinghouse deposit requirements as per regulations." And you might be wondering, what does that mean? And we'll go over that right now. Brokerages like Robinhood typically route trades through a clearinghouse, which helps streamline the trade process until customer trades, like buying GameStop shares, settle. Usually that process takes a couple of days to settle, and the clearinghouse taking on that trade is required to put up collateral on behalf of the broker to help facilitate a trade forward as an intermediary. But when volatility strikes and shares move up and down over those two settling days, that process can become prohibitively expensive. Basically, to really simplify it, a clearinghouse helps process those trades. They are responsible for putting up money to execute, to buy and to sell these trades. When GameStop was shooting up in price, they didn't have enough capital to guarantee that they could actually settle or process all of these trades. So in this article, we have Webull CEO also, agreeing with Tenev, Robinhood, which is essentially a competitor. Their clearinghouse is Apex Clearing. That's their clearinghouse of choice. And the cost of clearing these things just went up. So in order to protect their clearinghouse, they had to pause trades because, quote, "we cannot use customer funds to front that cost due to regulation. So the clearing firms have to go into their own pockets to do it, and they simply could not afford the cost." But here's where things get extra juicy, because where Robinhood differs from Webull, however, is that it doesn't use an outside clearinghouse. Rather, as a 2018 Robinhood blog post explains, the trading platform decided to cut ties with the same clearinghouse Webull used, Apex Clearing, to instead build the technology in-house. So Robinhood is its own clearinghouse, and they are not the first to do this. Charles Schwab, TD Ameritrade also have built their own clearinghouses. But the key point is that clearinghouses themselves, the reason they built it, they aren't a charity. When you build a clearinghouse, clearinghouses make money too. And that's what we're going to go into. But hopefully this gives you a high level overview of what is happening behind the scenes. But now let's look at their official response to us, the public, about what happened this week. This is going to be more technical, but I think it's actually good to know, or at least good to try to know. And remember, I'm not a financial professional. This is me trying to learn about this and hopefully give a layman's understanding of what happened. Let's dive into this post. With the extraordinary market activity this week and the temporary restrictions we put in place on certain securities, we've received questions about how Robinhood works, trading, clearing, and settlement in clearinghouses. Here's an overview of the mechanics or the plumbing behind your trades. Let's dive in. Settling trades. When you buy or sell a stock, Robinhood sends your orders to market makers that execute your trades. So market makers like Citadel. Market makers send a record of the trade to Robinhood Securities, which works with a clearinghouse to record the trade. It takes 2 days for the clearinghouse to transfer the stock to the buyer and funds to the seller. This is known as clearance and settlement. In other words, everyone getting what they agreed to when the trade executed. In the industry, this is referred to as the trade date plus 2 days to settle, or T plus 2. Next section, meet your clearinghouse. Clearinghouses are SEC registered organizations that act as the central depository for securities. They keep a record of the stocks owned through a brokerage. Clearing brokerages like Robinhood Securities are member of clearinghouses. These clearinghouses have membership rules. Remember from before, Webull uses Apex. Robinhood created their own and it's called Robinhood Securities. These clearinghouses have membership rules approved by the SEC that govern the activity of their members. Clearinghouse establish financial requirements for members, including deposit requirements designed to reduce risk to the clearinghouse. So remember, these requirements are designed to reduce risk to the clearinghouse, essentially protecting their own company. Now let's go into the actual requirements. To clear and settle customer transactions each trading day by 10 a.m. ET, clearing brokers like Robinhood Securities have to meet those deposit requirements to support their customer trades between the trade date and the date the trades settle. What happened this week? The amount required by clearinghouses to cover the settlement period of some securities rose tremendously this week. How much? To put it in perspective, this week alone, our clearinghouse mandated deposit requirements related to equities increased tenfold. And that's what led us to temporary buying restrictions in place on a small number of securities that the clearinghouses had raised their deposit requirements on. It was not because we wanted to stop people from buying these stocks. We did this because the required amount we had to deposit with the clearinghouse was so large, with individual volatile securities accounting for hundreds of millions of dollars in deposit requirements, that we had to take steps to limit buying in those volatile securities to ensure we could comfortably meet our requirements. So again, this is more about them being able to fulfill their obligations that they promised us. I can see how they can kind of flip that to say that's for our benefit. Obviously, if they are unable to execute or fulfill these trades, we would definitely suffer. At the same time, this isn't our fault, and the fact that we got punished for it is what makes it so uncomfortable. Robinhood owns Robinhood Securities. This is their own clearinghouse. Now, it's possible that had they not done this, there might have been more damage done, but that's still not our fault, and that's why I think this anger is justified. Back to the post, our goal is to enable purchasing for all securities on our platform. This is a dynamic, volatile market, and we have and may continue to take action to make sure we meet our requirements as a broker so we can continue to serve our customers for the long time. So essentially they're saying that they can and they probably will do this again if something like this were to happen. I still don't understand why it has to be us that suffers. This is a totally inadequate response. When hedge funds pump up stocks or overshort stocks, there's never any reaction like this. Do we really have that much power? Let's go over their final line. Rest assured, our position remains firm. We stand with our customers and will continue to provide you with the resources and tools you need to become a confident, informed investor. This last line is pretty much bullshit. Robinhood is the worst brokerage when it comes to letting you become a confident, informed investor. The very same principle of let everybody trade means that not everybody will be better educated. And I'm not hating on that. I think people need to take their own responsibility when it comes to educating themselves on options. But Robinhood is not the place to become a confident, informed investor. In order for me to trade a similar level of options on TD Ameritrade, I had to take a very comprehensive 6-module course with multiple quizzes and 6 30 questions exams before they would even give me, I believe it was level 2 options trading. Robinhood, you just have to tell them, yeah, I've done this before, and they let you do it. Initially, I really loved Robinhood for removing the barriers completely, but recently, based on what they've done here, the constant outages, the very scary numbers that newbie traders might see when they do spreads, they need to do a better job of education. Yeah, that's the response. Let me know what you think about it. For the rest of this video, I just want to give a little bit more education or clarity on what clearing by Robinhood actually is. For that, we'll go straight into their support articles. There's actually 2 types of brokerages. There's introducing brokers and clearing brokers. These 2 types of brokers have very different regulatory oversight requirements. Before, Robinhood was only an introducing broker, which means that we used a clearing brokerage for back office support, like Apex that Webull uses. Now, as of 2018, Robinhood is also a clearing broker, which means they have complete control over giving you the best experience out there. Knock on wood, I'm sure they didn't expect this to happen when they wrote this article. What does a clearing firm do? They have 3 main tasks. Clearing, this is how a brokerage makes sure that the price and number of shares you expect to give or receive when you place a trade matches the price and number of shares the other person expects to give or receive. This is usually automated, and this always happens behind the scenes, so you don't have to worry about it. Number 2 is settlement. Once the trade is cleared, both the buyer and seller agree on which assets need to exchange hands, and the clearing firm oversees the transaction and makes sure each side fulfills their obligation. Again, this all happens behind the scenes, and this is part of the problem, is that we have no idea about what's happening behind the scenes. So this is actually a great opportunity for us to educate ourselves on the technicalities of it. But not only the technicalities of it, but just the true ways of how the market works. There's a very crazy video of Jim Cramer explaining what he did in his hedge fund days. And he says so himself that people that trade the market based on fundamentals are basically losers, or they're not real traders. The real way to make money is actually to trade on mechanics. And this is all part of the mechanics. There's all of these ways to manipulate the market based on market mechanics that have nothing to do with whether a stock or a company is worth investing in. It's just about knowing the rules, how things work, and doing stuff like Wall Street Bets did this week. And this is what hedge funds have been doing for years and years and decades and decades. And the one time that we figure out how to do something, all of a sudden there must be something wrong. But it was always like this. It's just that people didn't know about it. So that's why I think videos like this are really important. If this is helpful, please consider liking and subscribing. I'm going to be making a lot more videos just like this. But right back to the article, the final step of a clearing firm, what they do is something called custody. Once cash or shares settle from a trade, someone has to look after them and keep extremely detailed records of where the asset goes. Clearing firms have specific oversight from our regulators that enable us to do that. There are safeguards that make sure the record of your assets exists no matter what. We've got your back. Oh, the irony. So in summary, an introducing firm basically just gets the initial order, but the clearing firm is the one that processes it and keeps track of it and also settles it. So clearing firms are very, very important, and Robinhood uses its own clearing firm. So you have no choice if you're using the Robinhood app. You have to use clearing by Robinhood. And clearing houses make money. They make a small percentage of every trade. Now, because this is in-house, I'm sure it means that they're saving money, but ultimately they built this so they don't need to pay somebody else to clear these trades. And finally, let's talk about how the main way Robinhood makes money, and that's rebates from market makers and trading venues. So according to Robinhood, when you buy or sell stocks, ETFs, options through your brokerage account, your orders are sent to market makers for execution. To compete with exchanges, market makers offer rebates to brokerages. Robinhood Securities has relationships with a number of market makers and sends your order to the market maker among these that's most likely to give you the best execution based on historical performance. What does this mean? Essentially, market makers make money by the bid-ask spread. That's what people are willing to buy a stock for and what willing to sell a stock for. It's never usually the exact same price because people always want to buy a share for cheaper and sell it for more. The difference between the buy and sell, market makers make money off of that difference. So the goal of the market maker is to get as many orders as possible. The more orders they have, the more money they make. But these brokerages like Robinhood have different options when it comes to market makers. The way they choose which market maker to send their money to is that market makers pay pay Robinhood. They pay Robinhood essentially for their business, for us. We are actually the product, because when we trade, the market makers make money and they pay Robinhood to continue funneling our business to that market maker. And that is actually the main way Robinhood makes money. They say they're free, but it's not truly free. But every single order that Robinhood sends to a market maker's way, they're essentially capturing a small percentage of every order in the form of the rebate that the market maker eventually gives them. And through this method, how much did Robinhood make? They actually generated $271 million from what these are called our order flow payments in the first half of 2020. And that's according to an article by Washington Post. But yeah, that's the gist of it. Let me know what you think about the whole situation. Or did you even know that this is how they make money? Are you going to stick with Robinhood? I want to end on the UI of Robinhood because it's really quite bittersweet. I really like Robinhood. Their UI is one of the easiest on the eyes, easiest to use. I've learned a lot through their platform. I've made a lot of money trading on their platform. But after what's happened, they've really lost a lot of my trust. In reality, I'm probably going to keep some money in Robinhood, but I'm definitely going to move a lot of it out. I'll use them for some research, for some quick small trades, but I don't want them to hold any tangible amount of my money anymore. The lack of transparency is the main thing that's really leaving a sour taste in my mouth. But yeah, this is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.